All right, let's get some insights on the news that's shaping markets. For that, we want to welcome in Andrew Arons, founder and partner, Synergy Advisory Management Group. Andrew, thank you so much for joining us today. It is great to see you. All right, let's talk about the market action. We're watching some choppy range-bound action the past today, yesterday, but you're expecting markets to stay strong through the year end. What gives you that confidence?
Well, I mean, it looks like 82 or 83% of the companies have beaten their earnings forecast, and it looks like companies are doing quite well right now. And we're expecting the Fed to meet next month, and it looks like we're probably going to see a quarter point rate drop. So that should be good for the markets. And right now we're just in the middle of the summer, ending up, and we're doing some zigzagging here. But I do anticipate the markets to finish quite well this year.
Okay. So anticipating that they finish quite well this year, what risks do you see to that thesis?
Well, I mean, there's always risks in the market, right? We always see that. Anything could happen at any time. But it looks like right now, maybe we're going to see, the end of a war here, possibly, right? We're talking about that maybe by the end of the year. So let's see what happens. But things right now in the stock market look pretty good. And we'll see how it all plays out. But earnings really drive the market. And a lot of these companies are doing awfully well. And there's still a lot of innovation going on out there. And, I think people think, well, maybe we hit a bubble here with the AI here. I don't see that. I think there's a lot more to go here. So we'll see what happens.
Okay, and then let's talk about, you mentioned obviously how earnings are, especially this past season, how companies delivered. But let's talk about the expectation for rates. How big of a catalyst do you think a cut in rates could be for equities, especially as it relates to, say, small caps?
Well, the small and mid caps have, tried to make a move here. And I definitely think small and mid caps will benefit from a rate cut. So, hopefully that happens. It would be nice to see, the small and mids, do well here. And, I don't think there's going to be a rotation out of a lot of these big mega stocks right now. They're doing too well here. And, I still recommend a lot of stocks that have made big moves already. I think they're going to continue to make, bigger moves, moving forward.
Okay, speaking of those, one of those that's on your list, I know, is Reddit. It's made a big move recently. Year to date, it's made a big move, but a lot of that has been really within the past month, give or take. Why do you still like it? Where do you see the growth?
Well, Reddit has moved quite a bit. I was on the show a month ago. It's up 60%. And, we're at, almost all-time highs on it here. And I continue to think, there's 50 million active daily users, and this is increasing tremendously, by 33% over the last 2 years. This is a huge number. And, the stock is not just doing well here in the U.S., but it's doing really well internationally. And, I think that bodes very, very well for Reddit. And I think there's a nice path for it to move quite a bit higher here.
Okay, you've got two other names on your list that are in the Mag 7. Amazon is one of those names in terms of where you see opportunity. It has been an underperformer. What's the driver you see from here?
Yeah, well, Amazon's really been focusing on same-day service, which is growing pretty rapidly. People want, to order items and they want to get it fast. And, they're positioning themselves with the fulfillment networks to be within 20 minutes of 70% of the population. I think that's a huge driver. And, I'm walking around over the summer, going down Main Street in a lot of different towns here in New Jersey. And unfortunately, Amazon is just killing these mom and pop stores, over the years. And a lot of stores are just empty. And it's not just here in New Jersey, but, all over the country.
Okay. All right. And then let's talk about another name on your list. It's the Opposite in terms of, well, I don't want to call it opposite, but it's been an outperformer in the group. That's Meta. Impressive earnings, engagement growth. They're betting very, very big on AI, and they've had momentum this year. Do you still see value in this one?
Yeah, I mean, the stock valuation still looks pretty cheap. It's hard to even believe, but their report was great. The stock has doubled, in the market over the last 5 years. It's doubled the market returns over the last 5 years, I should say. And they're just doing extremely well, and I think that's going to continue to happen. I mean, EPS grew at 24.7% compounded over the last 3 years. That's incredible, and people just keep using their apps. And just like Reddit, it's all about daily users, and people continue to spend more and more time on these apps. And they make their money off of advertisements, and it continues to happen for both of these companies right now.
Yeah, their apps are sticky. That's a great point about what the active user is. And Andrew, before we lose you, just a quick thought from you on if there's a theme that you think that the market is missing.
Well, I think one of the themes, I mean, Home Depot just came out with earnings, right? They look pretty good today. And, if interest rates go lower here, which everyone's anticipating, that should help Home Depot and a lot of the home builders. So, the home builders started to move, and I think that might be a trend that we see moving forward.
All right. Well, we will certainly see if that's the case. They did stick by their forecast. We'll dive more into those earnings later in the show. Andrew, thank you so much. We appreciate it.